All right, so get ready because we're diving into a world that you might think is, I don't know, kind of boring, spreadsheets, numbers. But trust me, this is way more interesting than you think. We're going to be tackling accounting fraud today.
Oh, yeah.
And we've got a ton of research. We've got case studies. We're going to break it all down, what it looks like, how it happens, and why it should matter to everybody, even if you don't, wear a suit to work every day.
Right. And it really does impact everyone. We're talking about the manipulation of financial records,
Mhm.
and this can affect anybody. Investors, employees, even everyday consumers.
So it's not just like, oh, somebody made a mistake with the decimal point, right? This is like real intent to mislead.
Yeah.
Our sources highlight all these different schemes, and some of them are pretty creative, to say the least.
Oh, yeah. And that intent, the intent to deceive,
Yeah.
that is really key here. It's about deliberately creating this false picture of a company's finances, really to deceive someone, whether it's investors, creditors, even regulators.
Okay, so let's unpack some of these schemes here. One that I thought was really interesting, revenue recognition fraud.
Uh-huh.
So it sounds like companies are trying to like book these sales before they've even really happened.
Yeah, think of it this way. Like, imagine a company pre-selling, a product. It's like a new gadget that everybody's excited about.
Right.
They might try to record that revenue from those pre-orders like the sale's already complete,
Mm.
even though, the gadgets haven't even been made yet.
Wow.
So, it's a way to inflate their earnings, make it look like they're more profitable than they actually are.
But that seems so short-sighted. Like eventually they're going to have to actually deliver those gadgets, right? And if they can't, the whole thing falls apart.
You got it. And that's often the problem with these types of schemes. They might work for a little while, but, eventually reality catches up.
Yeah.
Another common one is overstating assets or understating liabilities. This is like trying to make your house look, I don't know, bigger and fancier than it really is.
Right.
By inflating the value of your furniture and, hiding all your bills under the rug.
Yeah, so creating this illusion of wealth and stability.
Exactly.
But how does that actually work in a company?
Well, for instance, they might overstate the value of their inventory, claiming it's worth more than it actually is.
Oh, okay.
Or they might downplay their debts, making it seem like they have less to pay back.
Mm.
All this is to make the financial statements look really appealing.
To investors, right?
Yeah, investors and lenders.
Wow. It just seems so deceptive. What about underreporting expenses? Is that basically just, like sweeping the bills under the rug?
It's more about creative timing than, outright denial.
Okay.
Think of it this way. A company might delay recording certain expenses, like, big bills for supplies, until, like, the next accounting period.
Ah,
This
okay.
way, their profits look higher, for right now, which gives this false impression of how well they're doing.
It's amazing, like, how much wiggle room there seems to be with these numbers.
Yeah.
And then there's, like, I guess the most blatant one, right? Falsifying financial statements?
Well-
That sounds pretty serious.
It is. This is where companies are going beyond bending the rules.
Yeah.
And they're actually straight up fabricating financial data. Like, they might create fake invoices, invent transactions that never even happened,
Wow.
or even change existing records. Completely change the picture of their financial reality.
That's a bold move.
It is.
It seems like it would be hard to pull that off.
You'd think so?
Yeah.
But it happens more often than you might imagine.
Mm.
And then, there's a good old-fashioned just stealing,
Right.
which
I-
falls under asset misappropriation.
Right. I guess that's the classic one. Everyone understands stealing,
Yeah,
even if they don't understand all these crazy accounting schemes.
exactly. It's about somebody within the company using their position to, take something that isn't theirs. It could be an employee pocketing cash. It could be using company money for personal expenses. It could even be diverting company assets, to like a side business.
It's a good reminder that fraud isn't always all these like complex schemes.
Right.
Sometimes it's just good old stealing.
Exactly.
And then there's cooked books. So that sounds like, I don't know, a mob movie or something.
It does have a certain ring to it. Essentially, it's kind of a catch-all term
Okay.
for any type of accounting manipulation that's designed to mislead.
Mm-hmm.
Could involve, any of the schemes we've talked about.
Right.
And the goal is to just make the financial statements look better than they really are.
Like they're creating like a fictional version of reality, but with their finances instead of like writing a book.
Exactly.
Related party transactions also stood out to me. Is this like doing favors for your family and friends?
not always favors,
Okay.
but it definitely involves transactions that benefit someone close to the company. It could be family members, business partners, even executives themselves.
Right.
The problem is, when these transactions are not disclosed properly or they're manipulated to funnel money or resources in an unfair way.
So not necessarily illegal,
Right.
but can be used for unethical purposes.
Exactly.
And finally, we've got creative accounting,
Mm.
which, almost sounds like an art form.
In a way, it can be.
Yeah.
It's all about using, legal accounting techniques
Okay.
to present the financial information in a way that's misleading. It's like, imagine an artist, using forced perspective to make a painting look bigger than it really is.
Right.
That's kind of what creative accounting does with financial data.
Okay, so we've got a good overview of all these different types of accounting fraud, but let's bring this to life. Let's look at some real world examples.
Yeah, let's do it.
Our sources mention some, infamous cases like Enron, which was, huge scandal back in the early 2000s.
Yeah, Enron's a classic example of how, they used all these complex schemes to hide their losses and inflate their profits. One of their tactics involved using what's called mark-to-market accounting,
Okay.
which basically allowed them to record potential future profits, as if it was current income.
Wait, so they were counting their chickens before they hatched.
Pretty much.
How did they get away with that?
Well, it is a legitimate accounting technique in certain situations.
Right.
But Enron just totally abused it to create this false picture of how well they were doing.
Wow.
They were essentially booking profits on deals that hadn't even happened yet.
Oh, wow.
And in some cases, they might never happen.
It's like saying you won the lottery because you bought a ticket.
Exactly.
They haven't even done the drawing yet.
That's a great way to put it. And that's just one example
Right.
of, the many schemes they use to deceive investors and, the public.
Yep.
Ultimately, of course, their house of cards collapsed, led to bankruptcy, and even criminal charges.
It's a reminder that, even the biggest, most powerful companies, they can be brought down
Absolutely.
by this fraud.
It can.
And speaking of big scandals, our sources also mention WorldCom,
Yes.
which took a little bit more of a straightforward approach
Yeah, a little more straightforward.
to inflating its assets.
WorldCom's strategy was actually shockingly simple.
Okay.
Basically, they made their expenses look like long-term investments. This is kind of like taking your, monthly grocery bill
Right.
and claiming that it's an investment in your future health.
So instead of recording those costs as expenses,
Yeah.
they were hiding them
As assets.
as assets on their balance sheet.
Precisely.
Wow.
They were basically pretending that their everyday costs were actually investments that were going to make money down the road,
Wow.
which allowed them to inflate their assets.
By a lot, I'm guessing?
By a lot. By a staggering $11 billion.
Wow.
Making their performance look much stronger than it actually was.
It's amazing that they got away with it for so long.
It is.
What about Lehman Brothers?
Well-
Their collapse was one of the things that, triggered the 2008 financial crisis, right?
You got it.
Yeah.
And their downfall involved a very complex accounting maneuver called Repo 105 transactions.
Okay.
Imagine Lehman Brothers is playing this financial shell game,
Okay.
temporarily hiding billions of dollars in liabilities to make their balance sheet look better than it actually was.
So were they basically sweeping their debts under the rug?
In a nutshell, yes.
Wow.
These transactions allowed them to move those liabilities off their balance sheet, for a little while.
Yeah.
Make it look like they had less debt.
Right.
But it was, a short-term fix.
Yeah.
That ultimately backfired when the financial crisis hit.
Yeah. These cases, they highlight some pretty devastating consequences
They do?
of these actions. It's not just about numbers on a spreadsheet.
Right.
This is about real people losing their jobs, losing their savings, losing their trust in the whole financial system.
You're absolutely right. And while these high-profile cases, might seem like a distant memory, accounting fraud can happen anywhere in companies of all sizes.
Right.
And the impact can be just as devastating, which is why it's so important to understand how to detect these things before it's too late.
That's a great point, and a perfect way to kind of transition into the next part of our deep dive,
Yeah.
where we're going to explore, the tools and the techniques used to uncover this accounting fraud.
It's going to be good.
From, traditional audits all the way to, cutting-edge technology.
Absolutely. Welcome back. So, as promised, we're going to shift gears here. We're going to talk about fraud detection. It's like this high-stakes game of hide and seek, and technology is changing all the rules.
Yeah, I'm really curious about this. We hear a being used to, like, catch these financial criminals. Is it all hype, or is it really making a difference?
I mean, it's definitely not just hype. These technologies are like revolutionizing how we approach fraud detection. Think about traditional audits, right? It's like trying to find a needle in a haystack
Right,
by hand.
right.
But data analytics, that's like having a giant magnet, just pulling that needle right out.
That's a great analogy.
Yeah.
So instead of, like, manually going through all this data, we can use these algorithms to, like, scan for those red flags that we were talking about.
Exactly. Machine learning algorithms can analyze, tons and tons of data, financial data, and they can look for those patterns, those anomalies that might suggest, something fishy is going on. And the cool thing is they can actually learn and improve over time. The more data they process, the more accurate they become.
So the more these systems see, the better they get at spotting those subtle signs of deception.
Yeah, they're getting smarter all the time.
That's pretty powerful.
It is. It's becoming essential, especially as like the volume and complexity of financial transactions, it just keeps growing and growing.
Yeah.
Human auditors, they just can't keep up.
Yeah, that makes sense. What about artificial intelligence? I mean, we hear that term all the time, but how is it actually being used in fraud detection?
AI kind of takes things a step further.
Mm-hmm.
It can analyze data, identify those patterns, and even make predictions about potential fraud.
Oh, wow.
Imagine an AI system that's like watching a company's financial transactions in real time, and it flags anything that deviates from the norm. And then, boom, alerts the human investigators to go take a closer look.
So it's like having a digital detective,
Right,
constantly looking for suspicious activity.
Yeah, always on.
That could be a game changer for companies, trying to stay ahead of the fraudsters.
Absolutely. And one area of AI that's particularly promising is natural language processing, or NLP.
Okay, you lost me. How does analyzing language help with accounting fraud?
So think about all the communication that happens in a company, right? You got emails, chat logs, memos. NLP can sift through all of that unstructured data and look for those keywords, phrases, even subtle changes in how people are communicating that might suggest that something shady is going on.
So it's like the computer is reading between the lines, looking for those hidden clues that a person might miss.
Yeah, exactly. It can be super revealing.
Yeah.
Especially, when you combine that with the traditional, financial data analysis.
Right.
It paints a much fuller picture of what's happening inside a company.
That's fascinating. But with all this talk about AI and machine learning, I mean, do we even need human auditors anymore?
Oh, hold on. I wouldn't go that far.
Okay.
Technology is a powerful tool, don't get me wrong.
Yeah.
But it's not a replacement for human judgment and expertise.
So it's more about collaboration.
Yeah, think of it as a partnership.
Okay.
The technology can be the eyes and ears, scanning huge amounts of data, alerting humans to potential issues.
Yeah.
But it's still those human auditors who got to investigate those red flags, understand the context, and make the call in the end.
It's like a detective duo.
Right.
The tech providing the leads and the human investigator putting all the pieces together.
Exactly.
I mean, all this fancy technology, though, it's got to be expensive. Is it only for, big corporations with tons of money?
Well, that was definitely true in the past, but things are changing. Cloud computing, software as a service models, these are making these tools way more affordable.
Okay.
So organizations of all sizes can use them.
So good news for the little guys.
Definitely.
It means they can, leverage these tools, protect themselves too. But are there downsides? I mean, is there anything that it might miss or even get wrong?
That's a great question. And yeah, you got to be cautious. One of the biggest challenges is that fraud, it's always evolving.
Right.
As soon as we develop, systems to detect one type of fraud, the criminals, they come up with a new, more sophisticated way to do it. It's a constant arms race.
It's like a game of cat and mouse.
Exactly. And another challenge is, the potential for bias in those AI algorithms.
Oh, okay.
If the data used to train those algorithms is biased, the system itself can be biased, which can lead to, unfair or inaccurate outcomes.
That's an important point. We need to make sure that these systems are being used, ethically and responsibly.
For sure.
And that they're not, accidentally targeting certain people or groups.
Absolutely. And that's why, human oversight is so crucial.
Yeah.
We need people, experts, who can evaluate what these systems are doing and make sure that they're not just spitting out numbers. They're making actual judgments.
It's a good reminder that technology, it's a tool.
It is.
And like any tool, it can be used for good or for bad.
Right.
So we've got to be careful about how we use it, especially in this fight against fraud.
Right. We need to be smart about it.
But speaking of being proactive, I think we need to move on to prevention now.
Yeah, let's do it.
Because while catching fraudsters is important, wouldn't it be even better if we could just stop them before they even do it?
Absolutely. Let's talk about that.
Welcome back.
Yeah.
So we've kind of gone through the dark side of accounting fraud.
Yeah.
We've even talked about all that, high-tech detection stuff. But now let's talk about stopping this before it even starts.
Yeah, prevention is key.
Prevention is key, right?
And you know what? Those fancy algorithms, AI systems, they are impressive.
Yeah.
But honestly, the first line of defense, it's pretty low tech.
Yeah.
Strong internal controls.
We talked about this a little bit earlier, but can we go a little deeper?
Yeah.
What do strong internal controls actually look like on a day-to-day basis?
Think of it as building a system, with checks and balances within the company. So it's about dividing up responsibilities. No one person has too much control over any one financial process.
Right.
This makes it a lot harder for someone to, cook the books without anybody noticing.
So multiple sets of eyes on every transaction.
Right.
But what about those really complex transactions?
Yeah.
Are internal controls enough for that?
That's a good question. And, the answer is it depends.
Okay.
Internal controls are just one piece of the puzzle. You also need, mandatory approvals for transactions, clear guidelines about who can authorize what, and of course, regular reconciliations, to make sure everything actually adds up.
Regularly checking and balancing.
Yes.
But we both know even the best systems, you can still have human error.
Right.
Or intentional manipulation.
That's true. And that's where, the human element comes in.
Yeah.
You can have all the best procedures, the most sophisticated software, but if you don't have an ethical corporate culture, it's all for nothing.
It's not just the rules, it's the environment, the culture of the company.
Absolutely.
So how can companies actually create that kind of environment where people want to do the right thing?
Well, it starts at the top with leadership.
Yeah.
They have to make it clear that ethical behavior is non-negotiable. It can't just be something they talk about, in meetings.
Right.
It's got to be something that they live and breathe. This means, you got to have a strong code of conduct, ethics training, and most importantly, create an environment where people feel safe speaking up. If they see something wrong, they can report it without fear of retaliation.
That brings up whistleblowers.
Yeah.
They play a huge role in exposing fraud.
They do.
But often, they risk a lot to do that. How can we protect them? How can we, make sure that they feel empowered to speak up?
You got to have strong whistleblower protection programs. Employees need to know they can speak up. If they suspect wrongdoing without fear of losing their jobs or, other kinds of retaliation, this means, you got to have clear channels for reporting, maybe protecting their anonymity when possible, and making sure that any investigations, they're done fairly.
So creating a culture where speaking up is encouraged,
Exactly.
not punished.
Yes.
But what about individual investors like us? What can we do?
Yeah.
We can't really implement internal controls at a company that we're thinking about investing in.
Right. But you can be an informed investor.
Right.
Don't just rely on a company's reputation or, some flashy marketing. Do your homework. Look into those financial statements. Look for the red flags we talked about.
Right.
And, don't be afraid to ask some tough questions.
So be a little skeptical, don't just take everything at face value.
Exactly.
What are some other red flags that people should be watching out for?
Pay attention to anything that seems inconsistent or just too good to be true. So, for instance, if a company's profits are, going through the roof,
right,
but their competitors are struggling, that could be a sign that something's off.
Okay.
Or if a company is constantly changing auditors, that's another red flag.
So it's those little subtle signs that something might not be right.
Exactly.
What about regulators? What role do they play in all this?
Regulators are like the referees of the financial world.
Okay.
They set the rules, they enforce the rules, and they investigate, potential violations. They also, play a role in educating investors and the public about risks.
So they're not just catching the bad guys, they're also trying to educate everybody.
Absolutely, you got it.
But like we said, these fraudsters are constantly changing their methods, right?
Yeah, they are.
What are some new trends in fraud prevention that we should be thinking about?
One of the biggest challenges is, the increasing complexity of these financial transactions. All these new technologies, cryptocurrencies, decentralized finance, it all creates new opportunities for fraud. It's that cat and mouse game all over again.
So we got to stay vigilant, adapt, keep up with the times.
Exactly.
What do you think, looking into the future, what do you think the future holds for fraud prevention?
I think we're going to see a lot more reliance on technology.
Yeah.
AI, machine learning, to analyze all this data, identify those suspicious patterns. But we also can't forget about the human side of things.
Right.
Fostering those ethical cultures, empowering whistleblowers, educating investors. It's going to take all of us.
Well said. We've covered a ton of ground today.
We have.
What's the one thing that you really hope our listeners will remember?
I hope they remember that accounting fraud, it's a serious problem, but it's not inevitable. We can prevent it. By understanding the risks, staying informed, asking questions, and creating a culture of ethics and accountability, we can make it a lot harder for the fraudsters to succeed.
Yeah, it's good to know that we're not totally powerless.
We are not.
We can protect ourselves.
Right.
Any final thoughts before we wrap up?
Just this. Stay curious, stay informed, and never, ever be afraid to ask questions. The more we know, the better equipped we'll be to prevent this stuff.
Couldn't have said it better myself. Thanks for joining us on this deep dive into the world of accounting fraud. We hope you found it insightful and maybe even a little empowering. Until next time, stay safe out there.